Alrighty guys, welcome to part 2 of this video. We're not going to do a big fat intro because we did that in the previous video. You guys are back. I appreciate you being here. Let's dive right into the content. We're talking preferred stock ETFs, and we're talking about the top 10 based on 4 different investing strategies, 2 separate time frames to see which one comes out on top. Let's dive in. Alright, so here's our spreadsheet again. We left off right here. Like I said, we've got 3 of these 10 do not have a significant time frame, so we broke it up into 2 separate time periods. We've got right here, these 7 are, we're gonna look at a time period from February of 2013 through September of 2021. And then for all 10 of them, including these last 3, we're gonna look at July of 2017 through September of 2021, which I know is not a long time frame and we shouldn't make massive investment decisions based on just a few years, but it's all we have to work with these 3, so we're trying to do an apples to apples comparison. In addition to looking at this data, guys, we're also going to look at some charts here at the end. We've got our monthly contributions as customary, our annual cost of living adjustment for our monthly contributions to adjust them in the future, and our lump sum investment. Now, I want to remind you guys, I've gotten some feedback on this, some criticisms, and it's fair. I'm not trying to imply that everyone on this channel is supposed to have $100,000 starting out. That's not it at all. But I do get some feedback saying, hey, what if we start with a lump sum of money? Some people get our inherit money. Sometimes you just are transitioning money over from a different asset class. And so I include this here not because I expect the average Joe to have $100,000, but because some people in the audience have said they'd like to see that element of the review. So we've got 4 different strategies. We've got, for each of the time periods, we've got monthly contributions, not reinvesting dividends. We have monthly contributions, reinvesting those dividends. Scrolling over further here. We also have a lump sum investment while not making any monthly contributions and not reinvesting. This would be you're actually retired and living off your income scenario right here. And then we have, if you happen to have a lump sum investment and you are still accumulating assets, we would be reinvesting dividends and making monthly contributions. And then we're doing that for the second time period, which I forgot to update here. So that's July of 2017 through September 2021. All right, without further delay, guys, we're gonna start with these metrics here: $250 a month in monthly contributions, 2% on the annual cost of living adjustment, and a $100,000 lump sum investment. This is not your entire portfolio, but just to have an apples to apples comparison to see how these investments would compare. We look here, we've got trailing 12 months of dividends, cumulative dividends, and portfolio value. So this is very straightforward, portfolio value. Cumulative dividends has to do with how much entirely in dividends you've earned over the entire lifetime of the time period. And then this is just the most recent year, how much was earned in dividends. If we look at trailing 12 months of dividends, we'll sort first by that. We can see the top result was the Global X Super Income Preferred ETF, SPFF, by about $50 in trailing 12 months of dividends. Worst performer here was First Trust Preferred Securities and Income, FPE right here at $1,200. We can see in this case though, when it comes to cumulative dividends, top result was SPDR, which beat out the Global X Super Income Preferred ETF by about 20 bucks. But they're all relatively close here in cumulative dividends. And then portfolio value, top result based on the portfolio value, would be $30,268.80. The low one here would be, like I mentioned, Global X. And if we scroll down here, we can see a chart here. I actually included the S&P 500 here just to see how things change with respect to having that in there. Just to give you an idea, not to say that, you know, because S&P 500 performed better that you should only invest there, just to show how it compared between the different investments. We've got all of them here and they're all relatively close together. Let's actually go ahead and zoom in here. I want to make sure that we can see the differences because they're a little bit minute. The yellow line here is just to give you an idea of what your contributions were, which is interesting. We can see that there are some fluctuations in the overall value with respect to how much you've actually contributed to this ETF. The yellow line is how much you contributed, so only a few of them ended up above how much they contributed. And then we've also got right here the total dividends that were paid out. Cumulative dividends, you can see here, they're all very much bunched together, but the top 2 were up here, PSK, and I believe that's SPFF, that's correct. All right, scrolling over here, let's take a look at the reinvesting those dividends and see how that changes the results. Trailing 12 months, the top result here is SPFF, which we expected. That's the Global X Super Preferred ETF, SPFF. And we've also got behind that 1681 for PSK, 1614 for PGX, and they're all kind of bunched together otherwise right around here. When it comes to cumulative dividends, when we're reinvesting, top result here is still SPFF from Global X at $78.44.98 in cumulative dividends earned, though they are relatively bunched together here. And then when it comes to portfolio value, top result here, PFXF at $38,307. FPE is close in second, $37,000. We've got 36, 36, 36, 35, and 34 for SPFF. When we look at the lump sum investment here, let's see how the results change, because we're not making monthly contributions and not reinvesting dividends. Top result here for trailing 12 months of dividends would be PGX at $4,959.68. A close second from PSK. And interestingly enough here, with this lump sum investment, SPFF ended up performing the worst. And the reason why this is the case is because there was a cut in the dividend that occurred, and as a result, it ended up with lower dividends in the most recent trailing 12 months. So it did still have a strong showing in cumulative dividends. We'll look at that in a second. Top result here for cumulative dividends is SPFF, the Global X Super Preferred ETF at 48,000, followed closely behind by PSK, PGX, and PFXF. Worst performer here was FPE down here. And if we look at the portfolio value here, top result there would be, remember, we're starting with $100,000, top result $105,000. We're not reinvesting dividends here, which is why we only see a $5,000 difference here. What's interesting though is we see a significant difference for SPFF down here. It's only worth 79. We should not see that much of a decline in a preferred stock ETF. So that's concerning for me. Otherwise, these are pretty close here. Any of these would be acceptable when we factor in that, we don't see a lot of volatility when it comes to the par value for preferred ETFs. And then lastly, we've got monthly contributions, reinvesting dividends, and starting with a lump sum investment. Based on trailing 12 months of dividends, top result here was PSK at $6,587.40, followed by PGX, PFXF, and then SPFF here. If we look at cumulative dividends over that time frame, which is about 8 years, I'd say, the cumulative dividends earned would be $56,000 from SPFF, with PSK coming in second at $55,000, then PFXF at $54,000. Only $51,000 down here for FPE. But if we look at portfolio value, we're reinvesting dividends, which means that we are increasing our share count, thereby increasing our portfolio value as well. Portfolio value here, top result will be $143,000 for PFXF, based on a $100,000 investment out of the gate and monthly contributions. Then we've got FPE at $139,000. The worst result down here was SPFF, only worth $113,000. So that's the time period of February of 2013 through September of 2021. But we're gonna now look at a much shorter time frame, which could really switch up who performs the best. And we're gonna look at all 10 ETFs in this case. All right, let's look at this next time period right here, July of 2017 through September of 2021. First, looking at those monthly contributions to see which one performs the best out of all 10 ETFs this time. All right, so top result here based on trailing 12 months of dividends. If we scroll here and look here, top result, the Virtus InfraCap US Preferred Securities, PFFA. Trailing 12 months of dividends here, $691, which is much higher than the others. And when it comes to cumulative dividends, it's also the highest there by a large margin, $1,380 versus $942 for SPFF. The question mark here is, when we have an outperformer on dividend income, how well does it hold its value? Well, shut the front door, it also had the highest value at $11,388.97 compared to only $11,280.23 for the next one, which was from Van Eck, the Preferred Securities X Financial. Interesting. Let's take a look at monthly contributions, reinvesting those dividends to see which one performs the best. Although I'm going to imagine we're going to see very similar results. Top result here, the Virtus InfraCap US Preferred Securities, PFFA, at $783, followed by $537 for SPFF, and then followed by PFF at $481 from iShares, and then the SPDR ICE Preferred Securities right here, PSK, at $479. Otherwise kind of bunched together, although PREF down here is only $389, and we'll see how that compares with portfolio value. Cumulative dividends, top result here by $500 is the Virtus InfraCap Preferred Securities, PFFA, at $1,520 in cumulative dividends versus only $1,004 for SPFF. And then based on portfolio value, top result again was Virtus InfraCap US Preferred Securities at $13,000. We had $12,000 for Van Eck Preferred Securities X Financial. PFF followed in third place with 11.9, then 11.8, 11.8, 11.7, 11.6, all very much bunched together right there. How do things change if we look at a lump sum investment where we're not making any contributions and see how the portfolio value changes? We were investing $100,000. How many actually stick around with keeping their principal value intact. Trailing 12 months of dividends here, top result again PFFA, followed by the Global X Super Income Preferred ETF, SPFF, and then still kind of bunched together in the 5s and the high 4s for the most part. Worst performer here, PREF at 43.84. Cumulative dividends here, top result, same results here, 26,000 for Virtus InfraCap versus 19,000 only for Global X. Interestingly enough, when we start with the $100,000 as opposed to making monthly contributions along the way, the top value here was PFXF from VanEck. X Financials there, that's 110,000, followed by 109, 108, 106, 104, 104, 103, 100, and in worst place here, last place, Virtus InfraCap. That's very interesting. And it could just be there that, you know, that the earlier months really outdid it. So as you can see how the results changed for that specific investment strategy. And then we've got lastly, the monthly contributions, reinvesting dividends, and using a lump sum investment. Trailing 12 months of dividends, top result here, again, PFFA at 8,000. Next result below was 6270 for SPFF. Cumulative dividends right here. Top result, 28,000. 8,000 more than SPFF. And then portfolio value right here. Top result 122 for PFXF, and then PFFA is way down here at $111,000. Let's take a look at some of those extra charts that I had available for you guys so you can see how those change things here. We already looked at that chart right there. We'll keep going. We've got lump sum investment here, not reinvesting any dividends. We can see the very stable investments. They stay right around $100,000. This one down here was not performing as well. That's the Global X one. This is the S&P 500. We know that it was going to grow more. It's not trying to match the S&P 500, but just to show that there's not as big of a correlation, though you do see a drop here with COVID. COVID is a little bit different type of a recession, right? And there's a lot of fear in the markets, not really based on any legitimate underlying financial data. It was just concerned about what could possibly happen due to COVID. Whereas with like the housing crisis, there were very significant underlying economical issues that were causing problems. Here though, very smoothed out compared to what we see with the S&P 500. Then we've got here the lump sum investment, monthly contributions, reinvesting dividends. You can see that the worst performer here down here was SPFF, and then most of them up here were bunched together. Top result coming out here based on portfolio value though was PFXF. So at the end of the day, guys, you need to decide if you have an income portfolio, do you or do you not want to diversify a portion of your portfolio into preferred stock? You're not going to get a lot of capital value out of it. That's I'm telling you that right now. That's not how preferred stocks work. It's ownership in a company, yes, but you are getting dividends as a result and very little capital appreciation. So are you going to add preferred shares to your ETF? Let me know. Leave your 2 cents in the comments below. I'm leaning towards yes, though I haven't really made a decision on which one here. I don't want to lose capital value of this investment, but I also don't need it to generate a ton of dividends. So, and the 1%, 1.47% expense ratio really concerns me still, even though it did show significant outperformance and maintaining its principal value. Leave your 2 cents in the comments below, guys. Let me know what you thought about this video. Let me know what you thought about this setup of having one video one day, one the next day, and having it be a continuation. Just trying to make it a little bit easier for you guys to consume the content and not feel overwhelmed with a 20 or 25-minute video. Nobody wants to stick around for that. I get that. That's all I got for you guys in this video. Later this week, we're going to be covering an investment that, can you believe it, might just outperform the NASDAQ and the S&P 500, and shut the front door, pays really great dividends as well. Stay tuned for that. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.